Hi, welcome to this video update, which is on the 1st of March. We're on Sunday, just going to give our weekly outlook and forecast for the FX markets. Pick out some pairs that we really like the look of for the week ahead. We've got plenty of pairs to look at. We'll go to the charts in just a moment. Now, we've just come in to the new month. We look back on February, we had our best month in a few years. I'm sure a lot of traders had a great month. It was really good trading conditions, higher volatility, nice big trends. And I think the volatility is going to continue. In terms of traders have said to me, well, I need to wait for pullbacks in all the pairs that I want to get into because they've moved too far. We've gone into a higher volatility phase, but it isn't high volatility in historical terms at all. So you can also go with continuation. Now, in terms of general pairs that we've liked over the last few months, really, long USD, long JPY on risk currencies, and long the GBP on the commodity currencies. They've all done very well for us, those trades. You could get pullbacks. I'm going to go and give you the levels I think we could pull back to, but if there is no pullbacks, I would go with continuation, if you like, the trades. Now, in terms of the situation globally at the moment, obviously the virus is causing havoc. Global growth has really taken a hit. China is in deep trouble. You can see that from their factory data that's just come out, the worst on record. Stock markets bounced a bit on Friday, and a lot of people say, well, could be the end of the sell-off, and we can move back to risk on. I just don't see that happening at all. Actually, I think we're going to continue to see risk off. Bounces in risk currencies against safe currencies, in my view, will be selling opportunities. Now, what we will do is we will go and take a look at the charts. But just before we do so, please do keep in mind it is my view. As of right now, it can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you'll get live access to our member centre. Now, in terms of the way we've been trading the markets over the last few months, it's looking at the really big picture. And before I look at the Forex pairs, I want to look at the stock market and some commodities in the bond market, because they will give us real clues to where Forex pairs could go next week. Now, I've updated all my charts in the member centre this weekend, so we're going to use the charts from there. So let's go and take a look at them. Right, just look at some contracts that will give you clues to where the Forex markets could go next week, and this one is the S&P 500 stock index, and obviously nice big tumble. Then you get a blue candle, bounces from support. Can we get through 3,000? We might. This candle here is going to be hard to take out in my view, but we could actually see this level give way. If it does, expect big volatility in the Forex markets. And while it does look a big fall on the daily chart, if you look at the monthly chart, you can see in the big picture it's a decent fall. But look how much the stock market's risen from 2008, just driven by cheap central bank money. Had that correction there, then the rebound. I just feel the virus and the knock-on economic growth and sentiment could send stocks lower, possibly down to here to 516. It's a decent correction in the big scheme of things, but it's not a big correction, and stocks are still very overvalued. So keep your eye on stocks next week. If this level does give way, big bout of volatility will come in the Forex markets. Also keep your eye on the T-note, which is a US interest rate contract, because if it's going down, it'll weigh on stock markets, the perception of US rates. And the key level that broke was here, 1.5. We're now down at 1.13, way below where US rates are now. So this continues to sell off as well, weigh on stocks. Now, I just want to look at two commodity contracts, because they're going to impact on risk off, and regular viewers will know we've been selling commodity currencies for months. We've done really well out of doing that in emerging markets, just on the view that commodities are going to be going down. The virus is just helping them go down a bit quicker. So this is crude oil, nice big fall, little bit of a correction, and another big fall. Okay, even though this contract has fallen pretty hard, it's still way overvalued. 30. That would be near to fair value, but it's just well overpriced. And crude oil will really impact if we go down on risk sentiment and the commodity complex generally, and commodity and emerging market currencies. So watch this contract next week. If we get through 44, the low, we could see another big bout of selling. This one is one really to keep your eye on next week. It's copper, and it's nicknamed Dr. Copper because it does give you indications of boom or bust in the global economy. It's a sort of barometer of the health of the global economy. And yeah, nice big fall here. I'm surprised it's held up so well. Look at it here. It rallies back, then she rolls over, but it's still very low volatility. It's this level here that has to crack, 2,500. If this level cracks, next stop, big support is 2. Okay, so if this breaks out, that will really impact on risk sentiment in the commodity complex as well. So worth keeping an eye on to give you clues to where currencies are going to go. Okay, now I just want to finish up before we go to the currencies and just look at a picture, which is very interesting. There it is. It's pollution over China, and we just saw PMIs come out of China in terms of factory activity, the worst a reading on record. And you can see from this image that China, it's basically shut down industrially. Here's the pollution in normal times, okay, before the virus, quite big. Where's it gone? Clear blue skies over China. Chinese industry has just taken such a massive hit, which is bad news for the global economy, obviously bad news for China. So we'll see, obviously, as we come into the new week how the currencies shape up. So let's go and give some views on what we feel might happen, and we'll start, as per usual, with the majors. Right, Euro USD, our first chart, and in terms of this pair, in recent videos, we've just been holding a short trade. We took at 109, 109, I mean 111.80. When the 20-day moving average snaps, just for new viewers, if we're really bearish, we want to see it act as resistance or rallies to fade back to it. The rally fades there, down, rally fades there, down. And then we get the rally above the 20-day where we put our stop behind, we get taken out. Took 200 pips on the trade, but we did give back 180. And we very often give back profit. And just for new viewers again, we are really after 300 pips, 500 pips or more. We've got plenty of those sorts of trades on, some 1,000 pips plus. We're after the bigger moves. You're always going to give back a little bit of profit. The way we would compensate for that is take half off on a surge to oversold. You can then sell on continuation or sell a bounce. Okay, but in terms of the euro, it is a nice rally. Why did it rally? I think it's a short squeeze. Too many traders short. You get a negative carry on the euro and a positive carry on the USD. So if you've sold, not only are you getting capital appreciation, you're getting nice interest rate earnings as well. Trade gets a bit crowded, stops get run. My own view is limited upside in the euro from me. I think 111 will be pretty tough resistance. I would sell back through 109.70 coming in fresh. The big picture for the euro is not pretty in our view. Eurozone economy, total mess, going into recession, as we've said frequently before, and the data supports that. And I think, you've got a bank with negative interest rates, and they're totally clueless on what they're going to do to help the economy. It's just not looking good in Eurozone. So I feel we're going to get a more downside. And also, you've got that migrant crisis coming back into focus. It's not in the news much now, is it? Because the virus is dominating. But Turkey has opened its borders. Could see a 2015 again. But even without the migrants crisis coming, odds for us or for the euro to move lower, but it is a nice spike to the upside, and I think hopefully cleared out the crowded short trade, and we'll see the downtrend resume. Right, next pair, and I'm going to look at AUD USD. Commodity currencies, saying it for a good few months actually, just sell them basically on any safe currency. And the Aussie's been a nice downtrend. Again, you get the snap of the 20, resistance down, 20-day moving average holds there, down. We are a bit oversold at this moment in time, but it's a good profit on 460 odd pips off the low of the day though. Now, if you're coming in fresh this one, how would you play it? I would sell through the 65 level for continuation, or sell a bounce back to the 20-day moving average, which is just lining up with my double trend line resistance. 67 is going to be a really tough level to take out, okay? Far more downside. I've got 60. Things get really bad. We could even overrun that level. It's a nice big trend, but I think it's got further to run. Australia is the most exposed country to China as well. New Zealand is obviously as well. Canada to a lesser extent. But the commodity currencies, you look at the big picture, what's going on, risk off, global economy is taking a big bash, commodity prices probably going to go down, more downside. Rallies are selling opportunities. Next pair, USD JPY. USD JPY, nice big fall, okay? And in terms of the JPY, we are out and out bullish, as we said last week. Not only have you got risk off, but the yen is very oversold. Anyway, so came up to 112, managed to get our short in, 20-day moving average snaps. We're now down at 108, so over 300 pips in profit on this trade, but we did get hit for 150 odd here on that big spike up. So we got our loss back and a bit of profit and more downside to come. I've put my target here as 108, which has been hit. I need to change that. It's now, of course, 105, the second target we're going for. And when I do the update on Monday, looking longer term for a move down to 100, so another 800 pips on the downside. In terms of this one, we're above a round number. I would sell below the round number, okay? 107.70, just clear of these candles here, clear of the round number. Or if we bounce back to this candle high, look for weakness. I think the 110 level is going to be tough to take out, and you've got the 20-day there as well. So looking for more downside. Canadian dollar, and again, nice move up in this one from where we originally came in, 130 turn. Take out the 20-day up, come back to the 20. We did get briefly through it, but can't take out the round number, and then up she goes. So again, another decent profit. And I think, in terms of Canada, obviously it is a commodity currency. So it is going to be hurt by risk off and falling commodity prices. But what I think will also hurt the CAD is the market is not really factoring in how quick the Bank of Canada are going to cut interest rates. They'll be cutting very, very soon. Okay. And I think the market generally isn't factoring in that cut. So that's an additional bearish factor for the CAD. At the moment, the CAD has got the best interest rate in the majors, isn't it? That is going to end. Again, it's a nice uptrend. Okay, we had a bit of exhaustion on Friday, but these levels here, double trend lines, should hold pullbacks. But again, I wouldn't wait for the pullback. If I wanted to get in, I'd come in through the round number. Okay, so we were 134.30. Go for continuation. Most traders want to wait for a pullback. I'd go for continuation on these trades. Saw it in the yen a minute ago, the Aussie dollar. Big trends. They could run a lot further. If we get high volatility next week, I'd want to be in if I wasn't with a small trade. If it runs on, that's great. If we pull back, I can add another one in on the dip. Okay, so yeah, USD is looking pretty perky. Let's now go and take a look at some crosses, and one in particular I really like the look of. Right, Euro JPY daily chart. I'm really liking the look of it. I know it looks fairly choppy price action, but I just like the way the price action has unfolded. Now, in terms of this pair, we did have a trade off the highs. It did snap the 20, came down quite nicely. Then we got stopped out, gave back profit again, but took some in. Then we try and run on through 121, and we can't do it, okay? And we're going to come in at 120.30, almost exactly where we got stopped out at, and look for 121 to hold. And we do hold. This blue is the last push in my view. Then the red nicely through the 20-day moving average and away from it. Okay, we finished off the lows, but I would basically sell a break of 119 through those two bodies, looking for continuation down to 116, then 110, or just sell a rally back to the 20 and first level resistance. I just think this pair's got really big downside. 110 I'd put as monthly support we're aiming for, but I think longer term we could run down to 100. I think this one is one to keep your eye on for fresh positions, certainly next week. I'm really liking the look of it. Next pair I'm going to look at is Euro CAD, and this is really a trade. I've said it, last couple of weeks, is the type of setup that we really like, and it's just really playing a expected payout. What I mean by that is you don't have much risk, but if you're right, you got a big reward. And the setup is basically we can get a big sell-off like that. Bollinger Band's really wide, and you steady up over a monthly support level, look for the rebound, and it's a nice one. It hits our target 147 on the first trade we had in, and I've just come in long again at 147.20, but we'll come back below the level. But if we go through it again next week, continuation for 150, and the risk isn't too much, just behind that level, right or wrong. Okay, this one was right, but even if it was wrong on this trade, I wouldn't have minded the risk so low against the expected payout. Now, I am obviously bearish the euro on the USD and JPY, but I like and look of it on the commodity currencies. It's seen as a safer currency. So, see how that one goes next week. Here's one of our slow, steady trades. AUD CAD, 3 commodity currencies. Which is the strongest? It's the Canadian dollar, because it's got no real exposure to China, whereas Australia and New Zealand do. And we know what's happening in China. That points to the CAD being the strongest. Simple theme, it's working. And it's come down quite nicely. 20-day kind of holding rallies. Got near enough to the 20, but couldn't. Again, we exhausted on Friday, but 20-day double trend line there should hold rallies, so you can sell back to that level or just take a break of the round number. Clearance the round number, going down to 80. Okay, it's not the most volatile pair, but it's kind of slow and steady, and it's got, for me, really big fundamentals in favour of the CAD, just clear cut. Okay, longer term. So I like and look at that. Let's take a look at some more USD pairs and some crosses. Right, USD pairs a few we're going to look at now, and also some of our favourite crosses, which are JPY and GBP crosses. Now, in terms of this pair, it is a USD pair. It's US dollar Chinese yuan. Dollar comes up quite nicely, but then look, over the last few days, despite risk off, the dollar has fallen back. That kind of surprised me. Now, in terms of the dollar, I personally think high odds buy back through the 20-day moving average and its double trend line. This support level holds, come straight back in, and we should see a good rise. Now, in terms of this pair, it's a lesser looked at pair, but sometimes they'll give you, or very often they'll give you very good opportunities, and I'd keep an eye on it anyway, even if I wasn't trading it. Just an indication of risk off if you get big blue. And I just noticed I put go long at 107.30. Anyone who follows my pages, that should be 701.30. Sorry, I've confused the digits. Okay, right, let's move on to a pair we've had our eye on for a good few weeks. Finally has come good for us. It's USD MXN. MXN, a real risk currency. Last week we were expecting Speculators to get hit on stop near a record net short position in this pair, and speculators are getting run out the market. And no, we finished off the high on Friday. However, I still think it's got way more upside to here. I put a target of open. Really, my aim is, or objective long term, 21. I would buy continuation in this one. Our stop is behind this level. If we dip towards it and firm up, I think that'd be good. If you wanted to buy the pullback, it is a fast moving pair, so any small position size is needed. But I think that's what, about a 7% rise, isn't it, in just over a week? So really nice looking pair for us in terms of open profit at the moment. I'm hoping we're going to get more. Let's have a look at another major, USD major here. NZD USD. Since we came in, it's the old 20-day moving average snap again, and we haven't even been back to the 20-day moving average. Similar background, obviously, to the Aussie. Could bounce, but yeah, if we got above this level here, you could sell back through 63, or this double trend line should be firm. Resistance, you got a round number there, and the 20-day moving average intersecting with the trend line. So that's the real line in the sand. If that was penetrated, then basically we would be neutral. Okay, but I've got a feeling it won't be. We'll have to see. I put an objective of 60 on the downside, but I think we could run on as far as 50. This is a really strong downtrend, and I think it's got further to run. Don't rule out a bounce. You know, we've had a good run in most of the pairs that we've been trading, so you expect a bit of retracement, but I just think the big trend will continue to the downside. Moving on to the next pair, actually we'll stop at this one. It's a USD proxy, Euro proxy. One we did very well out of, came up, we got stopped out, and I've elected to come back in through the 20-day moving average, but we finished red. But if this support level holds, we go back through the 20 in this open, we should go straight to the upside. I've said it in previous videos, I really like trading Euro proxies, more so than the Euro, because they tend to be faster moving, and the SEK, or USD SEK, a nice fast moving pair. Right, into the crosses. Here's another Euro long that went right for us. Look at that. And obviously Euro CAD did well as well. I still think there's more upside. Come in long above this resistance level, buying continuation. If she does come back, we'll see. But I just think it's kind of got more upside, basically. 180 on the upside. We'll see. Right, favourites, or some of our favourite pairs are basically JPY longs, and this is AUD JPY short, and we got a nice tumble, and yeah, about 430 pips so far. But again, I don't think it's over. 72, nice strong resistance level here. Okay, that's a level if we do bounce. What about if we don't? Continuation through 70. I go 69, 70, going down longer term, we think, to 60. So really good trade so far, and I still think, yeah, JPY's got more in the tank on the commodity currencies. I like all three. I've got all three short on the JPY, treating it as one trade. Now, in terms of another commodity currency short on the JPY, it's the CAD. Again, another nice tumble. You can see the resistance level here, but your stop needs to be back behind the round number. I'm giving it a bit of room. 82.80, and that will also be the 20-day moving average. Will snake down if we come back up. Come back up. Not much upside, plenty more downside. I've got 60 as my long-term target, but don't rule out a bounce in the short term. That'd be a selling opportunity. Again, if I wasn't in the trade and want to get in, I'd just buy continuation. Small trade, put another one in on the bounce. I said that earlier on as well, didn't I? But that's what I would do if not in the pair. What do we got next? GBP. I still really like the look of the GBP pairs. And if we look at the GBP since we got in, yeah, this 20-day moving average here, held price. And now we've got a bit higher, trying to break clear of the 197 level. I would ignore that tail. If we go through 197.30 on the open of the new week, I would take that as a high odds breakout for continuation to the upside. We're not too far away from that level, then 215. It's a nice uptrend, and I just feel more strength. Again, you could key off the 20-day moving average on strength if we pull back. GBP NZD, again, another nice uptrend. Look at the 20-day. I keep saying it, don't I? But I love the 20-day moving average. Holds price, we bounce up. Again, we're trying to get through the 20, well, clear the 205 level. I say through there, those bodies, well clear 205. I think it's 205.50. Look for a continuation. Again, 215. Then I'm going for 240 on the upside. Just think there's a lot of strength to come in the pound. And yeah, people say to me, oh, the pound fiscal stimulus isn't coming so quickly now, so that's bearish. No, it's not. It's still coming. Central bank may have to cut rates because of the virus problem. Well, that will apply to Australia and New Zealand as well. Brexit negotiation problems, they're going to have a deal. Yeah, I think the pound is basically, well, it is. It's a safer currency than the commodity currencies for sure in risk off. So I'm really liking it. And of course, the pound, said it a lot in recent videos, it's still severely undervalued because of that Brexit sell-off. So some nice pairs there, I think. And I'm just going to finish off with a few more, but I need to get my menu back. Sorry, let me just scroll back. Menu will appear in a minute. Here we go. Actually, let me just stop on this pair here. It's another CHF, another JPY pair. It's CHF short on the JPY. And you had that nice surge up in the CHF. Down, she's through the 20 and she's just down through the 112 level at 111.93. These bodies give way here. She's a sell to go back to chart low. Sorry, let me move my chart a bit bigger. So yeah, so sell through those bodies there. Okay. What else have we got? Here's another emerging market. I featured the MXN. This one is the USD Russian ruble, South African ZAR in a video last week. Speculators just so short the USD and just look at them, they get hammered. I think out of the emerging markets where they are now, I prefer the MXN, or I like the MXN the best from a risk reward point of view. But if you're in USD RUB or USD ZAR, still more strength ahead. GBP CAD. This one hasn't done much for us and would sit in just above our entry, but I like the price action on Friday. We come down to test the key 170 level, bounce, we're still red. We take out this 20-day moving average and get above the trend line, be up to break chart highs. Then after that, next stop, hopefully for us, is 190. The pound, a long way to go up on the commodity currencies. So they all look decent trades. Like I said, we're doing all three. What else have we got? This is the USD PLN, another Euro proxy. Nice uptrend. Flatten off. We come back to the 20-day moving average just to buy on any strength whatsoever. Take out this resistance level, then go to 420. It's the first test of the 20. Okay, if we were to drop through the 20, just come back through it. Polish zloty, Euro proxy. We think the Euro strength is over. Also, it's really an emerging market currency. A similar trade to this one. I missed it out when I did my other page of trades. Is USD CZK or US dollar Czech krona. Both the good longs on strength. And there's the USD ZAR. Nice move up, just one touch of the 20-day, and we're off to the upside. Looks good for more strength. What do we got next? One more pair. No, two more pairs to finish. NZD JPY. Again, a similar scenario to AUD JPY. This is your level here. Okay, bounce back towards the candle tail high, a sell. Okay, in terms of our stop, we're ahead of the 20-day moving average a minute here. But if price comes up, obviously this will snake down and get in front of our stop. So could bounce, but just feel the bounce be a sell. And this level gives way, then we'll be off to the downside. Just thinking that will indicate continuation. Sorry, I'm getting confused with my words, but you get the general picture. Sell the bounce or take continuation. Commodity currencies look good. The last pair we'll look at is very similar to AUD, CAD, NZD CAD, and this one has again moved pretty nicely. Down, try and get through the 20, off to the downside. That 20 will be hard to take out. 85 also a round number. Sell rallies or sell continuation. I keep saying that, don't I? Sorry, I keep repeating myself. But they're the pairs that we really like the look of as we come in to the new week. It's been a good run in February. Obviously, we've got to be alert that things can change. I do feel at this moment in time, I don't see a pullback coming in the risk currencies against the safe currencies, or big pullbacks. We'll have to see, because sometimes when you think, well, can't see a reason, it very often happens. But the big trends for me, safe over risk, and I don't see that changing anytime soon. Of course, it could, but yeah, so far, really good trading year. We're only 2 months in. I hope it continues. That is the video for today. Thank you very much for watching me. As usual, take care. Have a good day.